CJ from CJH Research has written an article which I think you should see. Now, when you think about which electric car stock you should buy, I think it's worth considering what he has to say. Many of you have emailed me, messaged me, and asked me which car company you think you should invest your money in. Well, there isn't really one answer to that, but it's worth actually understanding which car companies are going to be the most likely companies to succeed. In my view, Xpeng is definitely one of them, and here is why. Hello, my friends, and welcome to the Electric Viking. Great to see you here on the channel. Welcome to all the new subscribers. Welcome back to everyone else. I've told you for a long time now. In fact, I think I said it 6 months ago that I invested in Xpeng. Probably would have invested in them many years before that if I'd known much about the company, but until I made this channel, to be honest, I was just really looking at more mainstream car manufacturers. When I started this channel, I started to go into in-depth research on what exactly was going on in the electric car market, who was making the batteries, and realistically, obviously, there is not that many car companies which you should consider investing in. There's lots of electric car companies, there's lots of startups that, well, to be honest, you could make a lot of money on, or you could lose a lot of money as well. And I'm not personally into gambling. Personally, I buy stocks and then hold them for the long term. So some of you have been saying to me, well, the stock you recommended a month ago is now down. Well, I'm not telling you to invest in a stock because it's going to make you money in a month. I'm telling you to invest in a stock because it's going to make you money, a lot of money, in 5 or 10 years. That is your time horizon. If you're looking at trying to make money in a month, you're just gambling. Xpeng is a stock that I personally am invested in and will hold for the long term, unless things change. However, things have only changed for the better since I invested in the company. In fact, for the significantly better. Why? One key reason: production. You can talk all you want. You can go blah, blah, blah. We're going to do this. We're going to do that. We've got this amazing product. Lucid, Rivian, they have great products, but are they actually delivering on them? Not really. That's the truth. Xpeng, on the other hand, are actually delivering vehicles. Now, obviously in China, there is the 3 unicorn companies. They call them the 3 unicorns. Personally, I have changed that definition because I don't think that's fair to say that anymore. But anyway, that's what they're saying in China. Li Auto, Xpeng, and NIO. Now let's just ignore Li Auto because they make plug-in hybrids. Personally, that's not the future, clearly, so that's not a company I would ever consider investing in. NIO and Xpeng, they only make fully electric cars. However, remember, NIO's margins are significantly higher than Xpeng's on their cars. But there's one key issue here. NIO doesn't actually manufacture the cars themselves. They're manufactured by JAC Auto. That's sort of a bit of a red flag in my view. Don't get me wrong, I am invested in NIO, but I am more heavily invested in Xpeng for that key reason. Now, before we get into this article, let's have a look at the actual stock price. Now, Xpeng stock price is currently $37.80, which is down from a high of $50 from about 7 weeks ago. So it's fallen quite a bit since its high. Its market cap is $34 billion. What about NIO? NIO's down to $23. And it's fallen from a high of $42 on November the 24th, 2021. In other words, it's dropped nearly half its value in the space of only a few months. Its market cap is $36 billion. So $2 billion more than Xpeng. Now what about Rivian? Rivian's market cap is $58 billion, even though it's only delivered a very, very small number of cars. In comparison to Xpeng, a minuscule number of cars. Its stock price currently sits at $64, down from a high of $172, which was back in November the 16th. What about Lucid? Well, Lucid stock is currently sitting at $26.60. It's down from its high of $55 all the way back on November the 15th. However, it has a market cap of $43 billion, so quite a higher market cap there than NIO and Xpeng. Which is interesting, I think, when you consider production. In my view, production is the hardest part. And I think it's fair to say that Xpeng and NIO have figured out how to produce vehicles. NIO obviously doesn't make them themselves, like I said. Xpeng does. That to me is the key differentiator between those two companies. But if you look at Lucid's market cap, is it justified for it to be at 44 billion when NIO and Xpeng's market cap are much, much lower? I don't think it is. Now, CJH Research writes for Seeking Alpha, and he says, in my previous article, Xpeng forecasting its expansion into robotaxis, I covered the earnings potential of Xpeng's robotaxi business. I gave valuation targets that are in addition to Xpeng's core business in vehicle sales. In other words, CJ believes that Xpeng will actually figure out how to crack the autonomous driving code. If they do, then clearly their current valuation is a drop in the pond. But of course, there's no guarantee that will happen. However, I have made a video not that long, I think it was about 2 months ago, where I spoke about exactly what was going on with Xpeng's and their autonomous driving. And I've got to say, it's extremely impressive. It is the most impressive, in my view, out of any brand in China, and it's certainly top 3 worldwide. I think they're on a similar path to Tesla. They're using a different approach. They are using LiDAR. However, it's very impressive. But whether or not that pays off, we don't know. Who knows? Really, there's no way of knowing. My personal valuation of a stock is not based on whether it will crack that code. My valuation of stock is based on delivery of electric vehicles. Now, Xpeng are doing lots of other things. They're making robots. They're making flying cars. They're working on autonomous driving. But if you want to look at the valuation of a stock, let's consider deliveries. The company announced it's aiming to deliver 250,000 units in 2022 with a challenge target of 300,000. That would make it one of the world's 10 largest electric vehicle companies. The report cited that Xpeng revealed the figures in a recent communication with institutions, and the sources are definitely credible. Now, CJ estimates that Xpeng valuation using 3 values, 250,000, 275,000, and 300,000 deliveries. Even at the low end, Xpeng will exceed analyst expectations by a wide margin. Xpeng will likely announce these numbers during its March earnings call, and the analysts will raise their price targets accordingly. Informed investors should consider capturing cheap entry points before the market prices in the delivery guidance. In other words, it's cheap now compared to what it will be in a few weeks' time, especially in my view, in comparison to what it will be at in 12 months' time. Xpeng has given its estimated deliveries of January 2022 at 13,000, February at 9,000, March at 16,000. Since the publication date, the official January deliveries came in at 12,922. And the graph here shows the Q1 delivery estimates given by Xpeng and linear growth curves that the 2022 cumulative deliveries end at 250,000, 275,000 and 300,000. December 2022 deliveries are projected at 30,000, 34,600 and 39,600 respectively, representing 85%, 116% and 148% year-on-year growth, which does seem possible considering their growth in 2021. Let's consider Xpeng's past performance relative to its guidance. It issued the Q4 2021 guidance of 34,500 to 36,500 deliveries and delivered more than that at 41,751, a 14.3% to 21% beat. For the year 2021, Xpeng guided 90,000 deliveries, but it delivered 98,000, a 9% beat. In other words, it's doing better than it says it will. Therefore, if they're forecasting 250,000 and aiming for 300,000, it seems likely they'll hit their goal of 300,000. What are the analysts' consensus though? According to the data from S&P Capital IQ, analysts on average estimate Xpeng 2022 revenue will be 5.9 billion. To compare this estimate to the guidance, CJ uses an average per unit sales price of $39,000 In June last year, Xpeng CEO revealed the average sales price had exceeded $39,000 at the China Auto Blue Book Forum. Since then, the cheaper P5 model has entered the sales mix though, and it's growing with increasing popularity. Some of you might have seen my video that was featured on numerous websites about the P5. It's a revolutionary vehicle. I'll put a link in the description below to that video. You need to see it, and you'll see why exactly that vehicle is a game changer. And I don't say that lightly, it is a game changer. Check out the video, the link is in the description below. However, Xpeng is expected to launch a new full-sized SUV model G9 in Q3. That's priced well above the sedans. Therefore, they should be able to hold their average sales price at about $39,000 in 2022. Now, last month, Deutsche Bank estimated Xpeng will sell 190,000 units and gave it a $57 share price target. That would give it some pretty big growth on that current share price right now. Now, interestingly, analysts have projected share prices, but the strange thing is they've only done it based on what Xpeng's projections were from last year, not for this year. They haven't updated their information. And CJ says that because they haven't updated this information, their estimates currently are extremely conservative. But once they update it based on Xpeng's actual deliveries over the last quarter in 2021, we're going to see some pretty big growth for these companies. Very likely the stock price will increase. Now, CJ says that demand is going to push the stock price up. Elon Musk often states that Tesla is currently demand constrained. It's true. He backs up his claims with reports of months-long delivery backlogs. Xpeng has the exact same challenge, massive backlogs. It operates in the largest automobile and new energy vehicle market in the world, China. And it's expanding its operations in Europe with more than 25 million vehicles and more than 5 million EV sales expected in 2022 in China. The guidance numbers are not constrained at all by market size. CJ says he believes demand is there to support this guidance. So production, can they actually produce the cars that they want to? I mean, it's all well and good to say it, but can they do it? During the Q3 earnings call, Xpeng gave the following statements. Our first plant is currently running on double shift with production lines working up to 20 hours per day and production is ramping up rapidly. Our current plant and the plants being built in Guangzhou and Wuhan will be more than 400,000 units per year. By adopting a double shift production at these plants, annual production can reach up to 600,000 units. You can see they're being pretty aggressive here. The other thing is they're planning on expanding to 25 different countries over the next 2 years. Multiple industry sources reported last August the company broke ground on the second phase expansion of its Viking plant, doubling its annual capacity from 100 to 200,000. The 100,000 here refers to the single shift capacity. To summarize, Xpeng's production capacity is currently maximized at 200,000 with double shifts. Second line expansion is expected to be complete sometime in Q2, bringing capacity to 300,000. The company has the option of adding another double shift to the second line, bringing the total potential sales or production to 400,000. The second factory in Guangzhou is expected to be complete by the end of this year, bringing capacity to 500,000. The third factory in Wuhan is expected to be complete in 2023, bringing capacity to 600,000. It's really good to see this research from CJH Research, because this is giving us a good idea of where Xpeng are going to be in only a few years. Capacity of 600,000. That's going to be more than many legacy automakers will be. Seriously, it's definitely undervalued right now. Supply chain. Two critical components of EVs can potentially constrain production. Those are the chips and the batteries. In an unsighted analyst quote, South China Morning Post writes, all electric vehicles amid the lingering shortage of semiconductor chips may leave a 20% shortfall in this year's demand for so-called new energy vehicles. It's important to note the shortfall was more severe in 2021, but it has not slowed down Xpeng's growth. And I've said this numerous times on this channel. Xpeng were able to grow massively in 2021 in spite of these so-called chip shortages. Now, CJH Research says the reason it has weathered them so successfully was the same as the reason Tesla did. Xpeng and Tesla built their software in-house and were able to adapt to the coding needed to maintain chip supply. Tesla said in its second quarter earnings that it was able to substitute alternative chips and then write the firmware in a matter of weeks. While chip shortage is a risk we should acknowledge and monitor, it is not a major obstacle currently for Xpeng. What about batteries? Well, the global battery supply this year is expected to face a lithium mineral supply shortage. Benchmark Mineral Intelligence estimates 26,000 tons of LCE, lithium carbonate equivalent, supply shortfall. That's a pretty big shortfall. Inevitably, the shortfall will not fall evenly on EV brands and will create some winners and some losers. Tesla has been a winner in part because of its battery supply moves. Last year, Tesla signed a long-term strategic partnership with CATL, the largest battery producer in the world by some margin. To service this agreement, in June 2021, CATL started to build a new battery production facility only 3 kilometers from Tesla's Giga Shanghai, and I have a video about that too. I'll put a link in the description below to that video. By January 2022, CATL already started to deliver batteries from the new facility to Tesla. How does this impact Xpeng? Well, Xpeng made similar battery supply moves. Last year, it purchased batteries from 2 suppliers, CATL and SK Innovation. Last month, sources reported that Xpeng plans to bring in CALB as its new main battery supplier and another additional battery supplier, Sunwoda. This is key, in my view, battery supply, and not just getting them from one manufacturer. And I believe this is a challenge, going to be a big challenge for General Motors and Ford and other companies. Only having one key supplier is dangerous. This is the good thing that Xpeng are trying to do, get supply from multiple companies. That's 4 different battery makers will be supplying Xpeng. Just as CATL placed its new factory close to Tesla, CALB is planning to build a new factory in the same city as Xpeng with an annual capacity of 50 gigawatt hours. That is equivalent to approximately 625,000 EVs. Though the new facility may not service Xpeng exclusively, it was announced in the same article on the Xpeng CALB partnership. The implication is that CALB believes Xpeng will need much of the 625,000 per year capacity, even though it is one of 4 battery suppliers servicing Xpeng. In conclusion, Xpeng has secured battery suppliers and ramped up production facilities well ahead of its growth curve. Its growth executions are masterful. Year-on-year growth of 150% or more this year is not only feasible, says CJ, but likely. Valuation target. CJH's valuation model. The 250,000 deliveries returns $113 per share, and 300,000 model returns $149 per share. So in other words, based on his model, if they do hit 300,000 this year, the stock price will 10x. The stock price will increase by a factor of nearly 5. Now, I'm not saying that's going to happen, but I am saying that Xpeng's stock price will undoubtedly grow this year. Now, this implies an EV 2022 sales multiple of 10.7x. That is still less than the multiples enjoyed by US EV firms. Tesla trades at 11 to 13x, 11 to 13 times multiples. Lucid and Rivian much higher than that. Considering Xpeng is growing substantially faster than Tesla, this $133 target is conservative in the eyes of CJH Research. Now, personally, I think it's not going to hit $133 by the end of this year. It's unlikely. It's possible, but unlikely. But I do think it's going to grow significantly from where we're at today. What about another X factor? Well, another one is that in addition to vehicle sales, Xpeng is expected to launch a robotaxi business this year. The company also expects to start delivering eVTOL vehicles, in other words, flying cars, in 2024. I think that's optimistic, maybe 2026, 27, but it does appear as though it is feasible and possible. In addition, Xpeng is developing a robotic pony. Now, these 3 products will eventually bring in additional revenues. Whether that's in 2 years, 3 years, I'm not sure, but I do believe at least some significant upside potential for the stock. Now, 2 other things CJH Research points out are significantly going to impact Xpeng's valuation in the short term. First, Xpeng Hong Kong shares were added to the Hong Kong Mainland Stock Connect on February the 9th. That's a system that allows mainland Chinese to purchase securities listed on the Hong Kong Exchange. Both Hong Kong and US shares rose immediately as a direct result. The future implications of this are important. The new base of investors in mainland China are more familiar with Xpeng's products, and they hold a much more positive sentiment than US investors. Xpeng's price movements will enjoy stronger support levels as a result. In the event of any geopolitical disruption to US listings, the Hong Kong shares would no longer be restricted by the low liquidity concerns of the Hong Kong stock market. Second, as per a Reuters report, the China Securities and Regulatory Commission Vice Chairman Fang met with a group of foreign financial institution executives and informed them that China and the United States were making progress in coordinating regulations governing Chinese companies listed in New York, and there could be a positive surprise by June or earlier. That means by June, China expects to finalize an audit system agreed upon by both countries, thus removing any delisting concerns. It is a vague announcement by a political official that depends on both countries agreeing. So it's possible that this could happen. This would remove some of the perceived risk of investing in Chinese electric vehicle companies. Now, personally, I'm invested fairly heavily in Chinese EV and battery companies, both through the LIT ETF and the BATT ETF, and also through a few other companies. NIO and Xpeng are two of them, and there's a couple of others which I'll list in a future video when I explain my entire stock portfolio to you and why I've invested in all the companies that I've invested in. That's coming very soon. Now, if you do have any questions about this, make sure you jump on Patreon, let me know your questions, and I'll help to supply any answers that I can. But as you can see, there's a lot of upside in this stock. And realistically, I mean, come on, look at the valuation of Rivian and Lucid. Even though their stock prices have crashed recently, they're still valued significantly higher than Xpeng, and it just doesn't make any logical sense. Considering Xpeng is delivering thousands of cars every month, considering their current capacity, their production capacity, considering the fact that for years now we've seen what the company can do, you can see the tremendous upside potential with this company. Now, don't go and buy the stock based on my advice. Do your own research, come up with your own strategy. You might be able to point holes in what I've said here today. I don't know. But regardless, it's definitely worth you investing some time considering investing in Xpeng. Thanks for watching, and I'll see you again on the next video. Bye-bye.